Welcome back. Part two is gonna be very short. Statement of financial statements, equity accounted statement of comprehensive income. And yes, so you can see that everything that's here comes from only the line items of mark. So this 322,500 comes from your, it's just the portion of JAC only, because we don't add mark because we are not consolidating, just equity accounting because it's an associate. And what else? Finance cost of 80,000, they are only for JAC, we didn't add mark. So I just want you to get that principle straight. After you've done this, then you add the profit after tax of the associates. So how do we get that? You take our portion of the profits, which was 30,000, and then you adjust for the correction of the adjustment of 1,750. Or you can go to your AOE, is that 30,000 less the 1,750. Correct. And that's, you add, the only time you add the associates is just that one line item for our share of their profits, and then you get the profit before tax. The income tax expense, you take only our portion. It was given to you in the question, 45,000, right? And you get the profit for the year, and you are done. That's your equity accounted statement of comprehensive income. And then you are told to do the notes, the disclosure for revenue, and you just had to only show what revenue is comprised of. And you were told in the question it's made up of sales and dividend income, and you will see that the sales that are included in disclosure are the sales of JAC only. There you go, 490. And then the revenue from dividend income is 45,000 only for JAC. But then of those, there was 2,500 from the associate, so we eliminate it. So it's 45,000 less the one from mark, and then you are left with 42,500, and that's what your revenue is made up of. That was all that you guys were complaining about. They were not requiring much, as you have not done if it's 15 for revenue. Equity accounted statement of changes in equity. And number one, the share capital. You can see that the share capital is the share capital of the parent only of JAC, because we are not consolidating mark. So the share capital is the share capital of JAC only. We didn't add this one when we are doing our statement of changes in equity. And then the retained earnings is also just our balance as JAC, retained earnings of JAC, the opening balance. And then you get your total and comprehensive, you add comprehensive income to your retained earnings opening balance. It was given to you, and you separate the dividends, and then you get the closing balances. Okay, nothing much there. And then lastly, your statement of financial position, and there you add all the items. They are straight from the trial balance. And then this one, investment in associates, is the original cost plus taking into account all your pro forma journals in your required number A. You see, whenever you are debiting investment in mark, that will be plus. Whenever you are crediting investment, that will be a negative. But the final answer over here in your statement of financial position for the investment in associates should be exactly the same with your final, your total here in your AOE. So you can do that just to double check if you did everything correctly. Okay, and then the current assets directly from the trial balance, share capital, return earnings straight from your statement of changes in equity, loan liability, accounts payable straight from the trial balance. The loan liability, you can see that we only added JAG balance, but we didn't adjust for that 20,000, which is intra-group, because this is an associate. We don't consolidate, we are only equity accounting. So that was your tutorial in a nutshell. Ladies and gentlemen, thank you very much. If you have further questions, I will explain in detail, and you just have to attend the tutorial at 2 p.m. today in our WhatsApp group, or 3 p.m. in our Google Meet, which is for the link. You can see your email. I sent an invite. Have a lovely day further. Thank you.